It's just January and layoffs are making headlines already. I hate to be the bearer of bad news, but the story needs to be told. Companies which once promised work-life balance are giving out pink slips. Jobs which once advertised cutting-edge workspaces and in-office naps are laying off workers like there's no tomorrow. I'm talking about the likes of Amazon, Meta, Apple, Salesforce. What happened to the tech dream? What happened to these tech giants? Yesterday, on the show, we told you about the tech empire. We questioned, is this empire seeing a slow but painful decline? Today, I want to talk about the tech bubble. Is 2023 going to be the year that the tech dream turns into a nightmare? Is 2023 going to be the year that this bubble finally bursts? Let's look at some of these ominous signs. This headline has got the world talking. Amazon says it will cut more than 18,000 jobs from its workforce. I repeat, 18,000. Why? An uncertain economy for one. But more importantly, the online retail giant says it had hired rapidly during the pandemic. The company statement is on your screens now. Remember, the company had announced some 10,000 layoffs earlier in November last year. So Amazon says it has laid off thousands after a hiring spree in the pandemic. And we all know about Amazon's blockbuster profits during lockdowns. So it was natural for the company to hire to meet demand. But what's happening now has been long coming. Other tech giants have also handed out pink slips. Apple has paused hiring for jobs outside research. Adobe has eliminated 100 jobs. Cisco Systems is starting a restructuring plans. Job cuts will follow. DoorDash is cutting more than 1,200 jobs. Salesforce will cut about 10% of its workforce. Meta is cutting some 11,000 jobs, the first major round of layoffs in the company's history. I could go on. And they're all citing the same reasons, that they're not shielded from a slowing economy, that they are prioritizing growth, they are restructuring. For nearly a decade, Silicon Valley has enjoyed a bull run, big offices, bigger paychecks, a relaxed work atmosphere. There was something almost cool about working for a tech giant. But now, this dream has crashed. And it's a stark reminder that the economy's boom and bust cycle has two elements. Let me explain. Let's go back to the lockdown days. The tech sector became a rare success story in all the doom and gloom. Tech companies drove businesses from door-to-door delivery, work-from-home apps to video conferencing. Big tech was having its big moment. IPO activity and venture capital returns soared to levels not seen before. Good earnings and rapid hiring was making headlines in the sector. Cut to now, the present. Investments are down. The tech IPO market has slumped to its lowest level since the crash of 2008. Stocks have plunged. Apple and Amazon each lost more than $830 billion in market cap in 2022. 2022 became the year that big tech stocks fell from glory. Meta plunged 64%, Netflix declined 51%, and fears of recession are everywhere. Mass layoffs are now a routine affair. But let me ask you a question. Is there something intrinsically flawed in how these companies have operated? Why do I say that? Most of these famous founders have prioritized value creation over profitability. Be it Meta or Twitter, they have enjoyed a successful run by selling aspiration, an intangible idea. They have prioritized notional wealth over real wealth, which is why in recent years there's been a big halo around tech startups. These companies have excelled at rapidly growing revenues without delivering enough profit. But that's not sustainable, especially when the going gets tough. Most of these companies have gone from a stakeholder management to a stockholder management. What do I mean by that? A shareholder is someone who owns stock in your company, while a stakeholder is someone who is impacted by a project in your company. So while an investor or stockholder may only be concerned about finances, you, the employee or stakeholder, may be wanting much more than that. Why is this problematic? Because you see, it is usually the stockholder who has the upper hand. Take the case of any tech giant or founder. They create an illusory value around their business model, around their product. So when the going is good, the stocks jump. The stockholder takes home big money. The stakeholder, not so much. And that is exactly how these founders have become billionaires. And when the economy slows down, their net worth may take a hit, but it is you, the employee, who suffers. You are sent home with a severance package as a consolation. So there you have it. The tech bubble seems to be bursting. Companies are under pressure to cut the bloat. They're paying the price for rapid hiring. The appetite for big spending on big tech is going down. Investors see the high wages and cushy perks as unsustainable. These tech giants have to face a new reality. They're being forced out of a period of growth at all costs. I'm not saying it's time to write off Silicon Valley. But as we head into 2023, it's high time that tech giants change how they operate. Look around you. Mission-oriented startups are not so mission-oriented when facing investor pressure. Hiring freezes, layoffs, management apologies. They're all reminding us that jobs are breakable contracts, not sacrosanct vows. WION World is now available in your country. Download the app now and get all the news updates on the move.